10-for-1 stock split. If you don't know what that means, you're about to learn something that could change how you invest forever. But here's what gets me excited. Stock splits often create some of the best buying opportunities of the entire year. Because when a company like Netflix splits their stock, it usually triggers that they're confident about future growth. And smart investors know how to capitalize on the market reaction that follows. So, let's talk a little bit about what's happening with Netflix. So the basics, Netflix announced that they're going to do a 10-for-1 stock split. That means for any one share of stock that you own by November 10th, you're going to get 9 more shares of stock. You may be wondering, why would they do this? Well, one of the reasons why Netflix wanted to split their stock is because it's expensive. Okay, it's about $1,100. It's one of 10 companies that are traded on the S&P 500 that's over $1,000. So that's a huge mental barrier for a lot of investors. All right. So if you're new to the stock market, if you're an everyday person and you've never really been tapped in to what a stock split is, you've never seen it happen, you may be like, well, Courtney, what is a stock split? So a stock split is when a company decides that they want to divide up the number of shares that are traded on the market. So Think about think about this as a slice of pizza, for example. Let's say you buy a slice of pizza and that one slice of pizza is $20. Okay? But the restaurant decides that they're going to take that same slice of pizza and they're going to cut it up into 4 pieces. You still have a pizza that's worth $20. It's still the same size, but you have 4 slices instead of one. That's exactly what a stock split is. It's a strategy that companies use to make their stock more affordable. And you're like, well, why do they care if their stock is affordable or not? Well, one of the official reasons that a lot of companies publicize is that they do this for their employees because they offer an employee benefit where their employees can actually buy shares of the company stock. And as that company stock becomes more expensive, they see it as a barrier for their employees to be able to buy the company stock. So in essence, they're saying that they're doing it for their employees. There's also a general market benefit as well. They often say that they want their stock to be more affordable, okay? Because the higher the price tag on a share of stock, the less everyday investors, like the people that are here, are likely to invest in that company. And they want the stock to feel accessible. If the stock feels accessible, there's more interest in the stock market for investors to buy the stock. Okay, it's affordable. It's a product that you use every day. One of the things that I tell people is that when you're looking for companies to invest in companies where you're spending money. If you're spending money there are a lot of other people that are spending money there as well. And so it takes you from just being a consumer in a company, but also making you an owner. That's good for the brand morale. That's good for the company's stock price. So when consumers can use Netflix and they can own Netflix, that's good for the company. So they're like, hey, instead of us trading or selling an $1,100 stock, $110 stock is much more accessible for the everyday person. But here's the deal about that part. And this is the part that I really want y'all to listen to. In this era that we live in with digital brokers and the ability to trade literally at the tip of our fingertips, the innovations that exist in trading, they've given us some really good benefits. And one of those benefits is the ability to trade fractional shares. So with fractional shares, you don't have to have $1,100 to buy, say, a Netflix, okay? Because you may have $50 and you can take that $50 and you can buy a fractional share of Netflix. Your fractional share, it moves at the same rate as an entire share of Netflix. And so, although there is this psychological appeal to cheaper stocks, the ability to buy fractional shares, it doesn't create a barrier for everyday people being able to buy an expensive stock. And that's one of the messages that I want you all to see in this opportunity. I think the news is good, right? The outlook is good for Netflix as well, because Netflix also believes that they can do this stock split, and there's a lot of opportunity for future growth for the company to see an increase in the stock split, an increase in the stock price despite the stock split. All right. But listen, you were never excluded from being able to buy this stock, okay? Even at $1,100, because even if you just had $5, you could buy a fractional share of Netflix. But regardless of having that benefit, the facts are the facts and the psychology is the psychology. And there are people who are turned off by certain stocks because of the price. And so now at $110, it becomes much more accessible. Look, so you may be wondering, is the stock split, is this going to be good for Netflix in the future? Well, it depends, all right? And as everyday investors, I don't want people getting caught up in whether or not a stock split is going to catapult the stock price alone. Because it's not just the split that matters. What matters is the company. What matters the most about Netflix is that they have something like 300 million subscribers, okay? 300 million subscribers. Their revenue is growing at an insane rate. It's a good company, okay? It is a great company. The stock split doesn't make it a better company. Also, the stock split doesn't make it a worse company. But let me share with you all a couple points. Number one, this isn't the first time that Netflix has split their stock. They actually did a stock split in 2015. And they also did a stock split around 2004. So this is actually the third time. Every time that they've split, there has been a lot of room for the stock price to go up. So the split has worked out well, not because of the split, but because Netflix is an amazing company. All right. A couple other companies that you're familiar with that have split recently. Last year, Nvidia did a stock split. Nvidia's stock split was a 10-for-1. At the time that they split, the stock was about $1,000. So their $1,000 stock went to $100. That $100 stock from last year is now about $200 today. So the Nvidia stock split did produce a investing opportunity where the stock price went up. But then there's Chipotle. Chipotle last year did a historic stock split. They did a 50-to-1 split back in the summer of 2014. This is the largest split that we've seen in recent memory. It was the first in Chipotle's history. Now, for Chipotle, the stock split hasn't been as positive, and we've actually seen that stock price drop over the last year. And then the last one, Walmart split in February 2024. They did a 3-for-1 stock split, which was their first stock split since '99. The company, they said that they split for the same reason as Netflix. They wanted to make the shares more affordable for employees participating in their stock purchase program. Broadcom, one of the big chip companies that's doing really, really well. Great company. They did a 10-for-1 split in July of last year, and that stock has gone up. So it's mixed in terms of whether splits can produce gains in that underlying stock. What matters the most is how the company is performing. All right. Don't see this as, oh, the company is splitting. This is a great investing opportunity alone. You still have to analyze the quality of the company. So this is exciting. Netflix is a great company. Netflix is a company that I have invested in. I see great future opportunity for Netflix. One reason is because it's not a product-based company, so they are insulated from things like tariffs, the cost of goods, rising compensation costs in the US. None of that really applies to Netflix because their product is digital. And that's the reason why I like this company. All right, so look, a couple things that you need to know. Don't ever invest in a company just because they're splitting. What's the company's strategy? What do they do well? What's the future outlook? Truthfully, a stock split doesn't really make the stock more affordable because even before the split, you could buy fractional shares. Look, for more information about how to invest for the everyday investor, make sure you tap in, subscribe to Investing Uncomplicated, share this video with somebody that you love. If this has been helpful, if you're a beginner investor and you're looking to learn more about investing in the stock market, I do free beginner investing classes every Sunday and Thursday. Sundays is 4 p.m. Eastern Standard. Thursdays is 8 p.m. Eastern Standard. The link to register is in this video description. That's tomorrow, 4 p.m. Eastern Standard. If you're watching this when I'm doing it live, it's tomorrow. But every Sunday, 4 p.m. Eastern Standard, every Thursday, every Thursday, 7 p.m. Eastern Standard. Thursdays, 7 p.m. Eastern Standard. Tap in. I teach you what the stock market is, how to make money, how to invest, how to grow your portfolio. It's a great conversation, even around shifting your mindset. All right, guys, that's it. Make sure you tap in. Turn on your notifications so you can see the next video that we drop. See you soon.